Hi, I'm Montana Yorke, your host here at CambridgeHouse, and I'm joined today by the one and only Gareth Soloway, Chief Market Strategist and CFO at InTheMoneyStocks.com. Gareth, thank you for being here.
Thank you for having me. It's wonderful to be here.
Awesome. Gareth, as a longtime swing trader, what is catching your eye on the market right now?
So the market is starting to get back to being a little bit on the overbought side. So if you look at the S&P 500, for instance, we've seen this kind of move in the markets. And I'll show my screen just so I can show people and kind of have you understand what we're looking at here. Let me take away my pre and post market data. But what you saw here was the S&P 500 in this very sharp uptrend, right? We saw this uptrend, and recently we broke below it. And notice how price is now making its way back to that level here. So the idea is that you'll likely see price get back to this point right here. And I'll be looking to actively short that in the near term. I'll be going bearish on equities again. Over the last couple of weeks, I was a buyer of beaten down technology names. They've some like things like PayPal, even Facebook recently, I just started to accumulate because they've been crushed so much. But I do think that, again, the markets are getting close to kind of their end upside run. And I expect that the Federal Reserve will have a hand in pushing the market back down as they talk about raising rates even more.
Amazing. And just for my more junior listeners, do you mind sending us the definition of S&P 500? What does that mean?
Yeah, so S&P 500 is basically 500 stocks that the S&P has within that index, and then the index moves based on those stocks. So the performance of those stocks, it'll be, each stock has a different weighting based on its market cap, its size, and then that's how the S&P is calculated.
Amazing. Thank you so much. So I heard that you are buying these beaten down tech stocks, different things like that. So I'm assuming you are currently deploying capital.
Yeah. So the beautiful thing about I'm a more short-term trader. I'm what's called a swing trader. To define swing trading, it's basically holding a stock for days or weeks, sometimes months, but basically you're not a long-term investor. So for me, I look around and I say, okay, well, those stocks look cheap, but these stocks are really expensive. So I might go long some stocks and then go short other ones. But the beautiful thing about it is, even when the market to me looks overbought, there's still segments of the market that are underbought. So for instance, one of the areas that I've been accumulating for a few months has been China stocks, because they've been just so beaten down, and the value, there's so much value there. And we've actually seen stocks like Alibaba start to really react and move to the upside in just the last few days. But yeah, there's definitely always places to allocate capital, whether it's gold, whether it's Bitcoin at a certain point, that it keeps me on my toes, and it's nice. It's fun.
Amazing. And do you mind just walking me what your portfolio currently looks like?
Yeah, sure. So over the last few days, I've been trimming long positions. So I'll show you guys just a few of them here if we flip over. So like today, I sold my C Limited, which had just been absolutely annihilated. So I was actually short in this upper range. I was out of the money for a while, but finally I got in the money. And then down here is really where I started to accumulate it. Once it got down to this level, there was a key support around 130 or so. And then you could see it's bounced all the way back to 174. So basically I said, all right, I'm going to take my money off the table. Doesn't mean it's not going to go up higher, but for a risk reward perspective, once you make 10 or 20% on a trade in a week or two, I'm more than happy to say, okay, enough is enough. I'm not going to get greedy here. I'm going to step aside. So stuff like C Limited, I'm currently long PayPal, PYPL, which has just been hammered. But look at this support. And again, I'm a technical trader, so I'm looking at these type of levels, like this pivot, and then again, it goes up, and then it does a full round trip back to that level. The idea is the probabilities of the chart dictate a bounce back, probably back to about 160. And then another one in my portfolio that I've been accumulating is obviously Facebook. Facebook hit this long-term major trend line right here. And today it just had a beautiful snapback rally, closing back around 132 after trading around 220 or 232 after trading around that level, that 220 level. So in terms of my portfolio, I would say right now I'm about, I'd say 20-30% long, 20-30% short. And then I also have positions in gold right now. Gold is one of my favorite assets right now going into the second half of the year. And then I also have some cash on the sidelines. I always like having some cash because you never know when the next opportunity is going to arise.
Amazing. Thank you so much. And then do you have any tips, investing or otherwise, for any junior investors in my audience?
Yes, a lot. I mean, I have learned every rule in the book the hard way by losing lots of money in my early career. So I have lots of rules. The number one rule that I found that's helped me is to go into a trade understanding that you may be wrong, right? So in general, when new investors invest, they think they're going to hit home run right out of the gate. And so they deploy too much capital. And what happens is when that goes against them, it really hurts, right? Instead, think about it like this. If you're going to enter a trade, let's say it's Facebook, right? Say, okay, how much money am I willing to put in as a full position? Maybe $100,000. Divide it into fours, right? So you have 25, 25, 25, 25. At the first level you want to buy, put 25,000 at risk. If it goes up, you make some money. If it goes down, you can dollar cost average. And we know that Facebook's a good quality company. At some point, the technicals are going to take over and you'll see a bounce. But always going in thinking about the defensive is how you're actually going to be offensive in terms of making money. It's really amazing how it works. Another rule is trade less to make more. A lot of newer traders are always wanting to be in that trade. They want to have that itch. They have that itch to always be in a trade. If you sit back and let the trades come to you, you might only take one trade a day or as a day trader or even one trade a month as a swing trader, but you'll find that you make more money.
Amazing. Thank you so much. And if my listeners want to learn more about you, Gareth, where do they find you?
You can find me three places. Twitter is the easiest at Gareth Soloway. It's all free. I post up charts. I posted up that Facebook level yesterday at 220, already up $12 off of that low. You can follow me there. If you're more interested in my exact trades when I enter and exit, inthemoneystocks.com is my website. I have a service there called Verified Investing. And then I also have another website called Verified Investing Crypto, which is just cryptocurrency trading there.
Amazing. Thank you so much, Gareth.
Thank you so much for having me. Have a wonderful day.
You as well.